It's a source companion. People feel it everywhere. Lift your hands and voices, free your mind and join us. You can feel it in the air. Oh, it's a passion. Oh, you can feel it, yeah. Oh, it's a passion. Oh, rhythm is a dancer. It's a source companion. People feel it everywhere. Lift your hands and voices, free your mind and join us. You can feel it in the air. Oh, it's a passion. Oh, you can feel it, yeah. Oh, it's a passion. Rhythm, you can feel it, people feel it. Rhythm is a dancer. Rhythm, you can feel it, people feel it. Rhythm is a dancer.
Let the rhythm ride you, guide you, sneak inside you, set your mind to move to its pulsation, bass vibration, sensation. Pause, it's not in place. Mind and body must be free to please take it all in. Nothing to lose, everything to win. Let it control you, hold you, mold you, not the old, the new. Touch it, taste it, free your soul and let it.
Good morning. Good morning, ladies and gentlemen. Welcome back and happy, guess what day it is? Hump Day. And I love hump days because I get to scream hump day at the top of my lungs. Woo! We are back, ladies and gentlemen, and I'm excited to be back. So let's get started. First and foremost, you guys got to hit me with a big old good morning. And then once we go ahead and complete that small morning task of the day, then and only then will we dive into it, ladies and gentlemen. So hit me with a freaking good morning. Tom, what's up, brother? With a big old hump day. My favorite day of the week. I got to find that GIF, the hump day GIF with the camel. Guess what day it is? Hump day. And I haven't been able to find that GIF in a while, man. But Tom, good morning. I saw a few other beautiful men and women up in here this morning as well. It's hump day, baby. Jake, what's up, buddy? Mr. Mike, locked in, dialed in, ready to go. Steve, what's up, buddy? Good morning, man. All right, so yeah, we just had CPI data drop, and CPI numbers came in better than expected. So let's take a look at the data that came in this morning. So we had core inflation month over month, 0.1%, forecasted to be at 0.3%. So it came in lower than the forecast. That's good. Core inflation year over year, 2.8%. Came in at 2.8%, forecast 2.9. So year over year, down about 0.1%. Month over month, 0.2. That's core inflation. But let's go look at just our CPI. So inflation month over month, 0.1%, forecast 0.2. And then we saw a nice little 0.1% drop year over year as well. So if anybody's wondering, hey, Josh, what just happened in the market? You know, why are the Qs spiking up $4 to the freaking upside right now? Why is the SPY spiking up $3 to the upside? Well, it's because we just had key inflation data, ladies and gentlemen, and we got some key data tomorrow as well. So come 8:30 tomorrow morning, if you're like, whoa, what's going on with the market? It's because we have PPI data. All right, that's tomorrow at 8:30, and then we do have some Michigan consumer sentiment data, 10 o'clock Friday. All right, so we know why the market's moving. We dissected and we picked apart, reviewed CPI. Do we have anything else on the calendar for today that's impactful? We do not. So we are in the clear for the day, guys. So let's go right to the charts, the technicals. Let's pick it apart and let's get an idea of what we could see for today's session. All right, so we know the SPY right now is sitting up around this 605 zone of resistance. So we need to go back to the daily and really see, is there any other zone or key level from that 605 zone up to that supply zone near 611. So let's go into the daily and let's see. We know we have this nice daily zone of resistance. It's up here between 605.38 to 605.85. And then we have this daily supply zone. All right, so rule of thumb is no supply at all-time highs. So if we saw like a rally base drop formation and that basing candle was sitting at all-time highs, we would absolutely tread lightly, right? But that's not to say it can't be respected. I mean, look at this previous all-time high supply candle back here. Price did come up. We hit some of those unfilled orders and we popped out. But we just have to understand that they're lower significant zones when they're near all-time highs. So we definitely want to get down into our lower time frames and see if we have some 4-hour, 1-hour structure to where we have some zones on top of zones. But we do have some of the supply. We have our base drop. So we're going to go ahead and mark up that daily supply. We got that daily zone of resistance. And now we're looking to see if there's anything in between supply, if I can get my damn thing to work, supply, and that zone of daily support resistance. Is there anything else in between those two levels that we could look to trade off of today? So just looking at the daily, what do we got? We got a lot of chop. I'll tell you that. We definitely got a lot of that daily chop we got to work through. But at first glance, this zone stands out, but it's just a pretty large zone. But if it's the size of the zone, it's the size of the zone. So, yeah, we're kind of probably looking right around this 607.78 to 608.38 region being our next zone of resistance to the upside. We got 1, 2, 3, 4, 5, 6 hits in that region. There's 7 hits, there's 8 hits, there's 9 hits, there's 10 hits. So we got quite a few hits off the zone. So it meets that criteria. And then we're looking at sharp moves away from the zone. So here we had a gap up, high a day, big drop. That's a pretty sharp move off that zone. I mean, we hit that zone, high a day at 608. We dumped all the way down to $600. That was an $8 drop that day. And that was the high a day before the drop. So that's a pretty significant move away from the zone. So we got 10 hits, sharp moves away from it. We could say it's a high probability zone. It meets that criteria. So that zone's between, again, 607.78 to 608.38. We got some supply to the upside. Let's flip her down into the lower time frames now, guys. Let's go right into a 4-hour, and let's see if we have some 4-hour supply that lines up with our daily. So we do. We definitely have this base drop formation. So we're going to go ahead and mark up that 4-hour basing candle. So that 4-hour supply zone puts you at 611.50 to 612.15. That is your 4-hour supply zone. And again, it's a simple base drop. We see the impulse out was very strong. We haven't come back up into that 4-hour supply yet, so it's untouched. It's going to be a nice zone of supply that we can trade off of. So that's going to be the 4-hour. Let's go into a 1-hour time frame, and we're doing the same thing on a 1-hour. We're looking to see, do we have any good 1-hour structure, and we can clearly see this is our 1-hour supply zone. So we got our daily 4-hour. Do we have anything in this region here? I mean, this is a nice little impulse to the downside. So where's our basing candle in this region? And then probably another little basing candle here because there's another big impulse to the downside. So we know we're going to have at least 2 1-hour supply zones. So here's going to be your first 1-hour supply zone. There's your rally base drop. There's your first big impulse and move to the downside. Right? We didn't quite get back up into that 4-hour, 1-hour supply, but we did form another basing candle before another strong impulse out. So we need to go ahead and mark up that basing candle as well. And so we're starting to see we got a couple of different 1-hour zones inside of the daily, but there's only one area where you get the 1-hour inside of the 4-hour inside of the daily. And you see where the zones get darker red? That's where all of my overlap takes place. So that bigger zone here, that's the daily, right? This zone right here, that's the 4-hour. And then this zone right here, that's the 1-hour. And so right here is where all of those zones overlap. The 1 hour overlaps, the 4 hour overlaps, the daily overlaps right here. And so that area is between 611.50 to 611.60. So this little 10-cent pocket, this little 10-cent window is where I have multiple confluence to get short on the SPY. I have daily supply, 4-hour supply, 1-hour supply, all overlapping in that 10-cent window. So that's going to be a great area to get short if and when price gets there. Now, where are we at right now? 605. Could we see the SPY push another $5, $6 to the upside today? I mean, it's possible, but it's asking for a lot. So I doubt we're going to see that level hit today, but at some point this week, if we see the SPY getting up into that overlap that we just talked about, I'm taking puts. I'm absolutely shorting the crap out of the SPY. That's going to be a great area to look to get short, right? But other than that, we are wrapping up the daily time frame analysis. We've got our daily supply, daily zones. We flipped it down to a 4-hour, to a 1 hour. We're pretty much good to go. Now we're just going to visualize some plans. That's the next step in the process. Get clear on what would I want to see and what would need to set up for me to start taking some trades. And just start to visualize those plans. Start to build those plans on out to where you know if I see this setup even taking place, would I take it or not? So let's go ahead and do it. If we were to see a simple break and retest off that 605 zone, would we want to get long? Absolutely. We're breaking a key daily zone of resistance. And if we hold above it as intraday support, we would definitely want to play this long up into our next zone. Where's the next zone at? 608. So go ahead and just visualize what that plan looks like. Entries would be off the zone, right? Pretty simple. Entries off the zone. Where would stops go? Stops would go below the zone. Target, next zone. What's your potential risk to reward on that trade? It's a 4-to-1. So is it good risk reward? Yeah. If we see the break and retest, would we take it? We would, because we have good risk reward. But let's say we ran this scenario and our next level of resistance was like right here. So you're over here like, okay, if we break the zone and we retest and I get in, that's where my entries would be. My stops below the zone. My target would have to be right here. And then you look at your risk reward and you're like, oh, it's a 1.5-to-1. Let's be honest. If we see that setting up today, would you honestly want to take that trade? Probably not. It's less than a 2-to-1 risk reward. So at least you know if you see that setup, you're not taking it because, again, you're limited to the upside. But in this scenario, you can get up to about a 4-to-1 risk reward. So that's one of the reasons why I think it's important to like go through after you've done, like found your zones, is start to visualize setups, visualize your plans, visualize what you would need to see at certain areas to take trades and start to map that out and build that out so you know exactly what you would do if you see that setup you're visualizing. You know where the entries would be, the stops, the targets. You can go through and say, well, I would only take 10 contracts on the trade. Maybe you would take 20 contracts. I mean, you're just really taking the time before the trade even sets up to be fully dialed in and fully prepared. So that's why I recommend it. It's very important, guys. And then, yeah, we're sitting below the 605 zone. So that's going to be the second trade plan for the days. If we open on up under that 605 zone, we come up, top out, fail to break it, we'll simply get short off that 605 zone back down to 603, because 603 is going to be your next lower zone of support. And that's how we're looking to trade the market today, guys. Super simple stuff. Wait for the market to open. Wait for it to get to one of your key zones. Read price action. And then just take the trade accordingly. You come down to support and you have great price action, take it long. If you fall below support and you see it turning into resistance with good price action, take it short. Where to? Your next daily zone. Keep it that freaking simple. And you'll make some good profit trading just doing that alone. So we're good on the SPY, ladies and gentlemen. Let's go ahead and get this down to the Qs, and let's do some QQQ analysis, and then we'll look at some of your individual stocks as well. Most definitely. Mr. Trump sends a tweet. Our deal with China is done. Subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied up front by China. Likewise, we will provide the China what is agreed to. All right, cool. That was 33 minutes ago. Right before we had CPI. Yeah, so QQQ analysis. Let's go to the Qs. We got some daily supply on the Qs. We have a drop, base, drop. So go ahead and mark up that daily supply from February 20th, 2025. That red candle right there from high to body is going to be your daily supply zone. Other than that, let's go flip that down into like a 4-hour and see if we have any 4-hour demand or supply inside of that daily supply. Because we're sitting at that supply zone on the Qs. Like we see the SPY, we have a good trade-off supply up around 611.50, but we're not there yet. Take a look at the Qs. We're already sitting at daily supply. So we're probably going to see a good trade set up here on the Qs today. So where is going to be your 4-hour supply? Well, initially, you did have it right here. You had a nice little drop-based drop. Price came back up, hits those unfilled orders, and then pops out. So we did have initially some 4-hour supply chilling right there. Price came back up, hit those unfilled orders. Let's go into a 1-hour time frame and see if there's any better structure on a 1 hour. All right. So nice impulse out, nice little base. Price mitigated it anyway. Comes up, rally base drop, stronger impulse to the downside, breaks the oppositional leg in the process. So we can see that there was a strong imbalance here because the impulse out was great and we followed through. Price has yet to come back up into that level. So we're going to go ahead and mark up that 1-hour supply zone right there, which it puts you at the very top of daily supply. So we're not really getting the overlap just yet. So we got the daily, we got the 1 hour. Is there anything else on a 1 hour? No, let's go finish it up on a 30-minute. Maybe we see something on a 30 that gives us some zones on tops of zones. Unfortunately, we do not. So we got the 1 hour near the tippity top of the daily. So realistically, we'd have to wait for the tippity top of that daily zone to get hit before we even consider a trade short on the Qs. We don't really have the lower time frame overlap here. So that's what we have to work with on the Qs. We got some daily supply. Top of that daily supply zone sitting at 539, and we're sitting at 536-ish. So we're about $3 away from hitting the top of that zone. So we got some daily supply up here. And your next lower zone of support here on QQQ is down between 533.80 to 534.17. Right? Then we got some supply overhead. So, is there anything else that we see on the Qs that would help us? Right? We don't have any overlapping supply, but do we have a key area of, say, resistance? I mean, I wouldn't say we have a key level of resistance, but there's an area of resistance. It's not key, it's not significant, it's not the highest probability zone of resistance, but it's an area that we can absolutely see a reaction off of. And it's really just up against these prior highs. So we had that prior all-time high here, we had this high a day, we had this back test off that prior all-time high where we hit it. That's where we created some of that supply. We saw price fall sharply to the downside. So, I mean, that area only has 3 hits. 1 hit, 2 hit, 3. But we have sharp moves away from it. Look at that sharp gap down. Look at that sharp gap down drop. So we got sharp moves away from that level. Let's go ahead and keep it on watch. Absolutely. So that already gives you a wee bit of a confluence, right? We got this lighter daily zone of resistance that's sitting at the very top of that daily supply zone. So that's going to be the best area to get short. Is going to be between 538.80 to like 539.20 is going to be the best level to play puts on the Qs today. You have some daily resistance, and it's the top end of the daily supply zone. So that's going to be the first plan, is getting short up around 539 today. Second game plan is if we come down to that 534 support zone and we hold it as intraday support, that's going to be where we play calls and where we get long here on the Qs. Down around that 534 support zone. And then finally, if we fall below 534, back test it and stay below it. As intraday resistance, we'll get puts off the 534 zone, and we'll short this down to our next lower zone, around 532. Ricky, what's up, buddy? So the market will be running upside today. I mean, not necessarily. I mean, we had good CPI data. The market can absolutely continue to push to the upside. Market's been very strong to the upside over the past few weeks. So, of course, could we continue to see momentum carry the market higher as we do see clearly buyers in control? Absolutely, but anything can happen. Just because we had good CPI data, just because we're seeing a nice pop to the upside, does not necessarily mean we will continue higher. I cannot tell you how many times we've seen a big pump in pre-market, right, due to CPI data or any other key data, and we finish lower on the day. Or where we see not so great data in pre-market, we see a big drop on off, but then we close higher on the day. So it's not a guarantee that we will continue higher today just because we have good data and we're seeing a positive reaction in pre-market. We still have to come in and play the technicals. That's what it comes down to. So with the Qs, if we run up to 539 resistance and we hit that daily supply zone, there's about an 80% chance that price falls off those levels. I'm taking those odds. I'm taking that bet. Right? 80% of the time, if I take this trade, I will make money. I'm taking this trade 100% of the time because I know 80% of the time I'm going to be profitable. So I'm still just purely playing the technicals and seeing how the market's going to react and set up today. If it's long, it's long. If it's short, it's short. I really don't care, man. I just want to be on the right side of the trade. All right, what else we looking at today, guys? Anything else on your watch list that you want me to take a look at? Tesla's going to be on watch today for the gap fill rejection. So there's Tesla on a daily time frame, and we see we have this big daily gap on Tesla, right? So top end of the gap is at 332.08. Bottom end of the gap is at 322.49. So we got this daily gap that we could fill. Where are we at? We're above the gap. So yeah, we're gapping the gap, essentially. We're gapping the gap. All right, so we had Tesla gap. Maybe we still set up inside the gap. It's possible. Like, we could see Tesla get back inside the gap, hold the top of the gap, and then flush. That's still a possibility. So we'll keep it on watch. But where could we see Tesla go next? Daily supply. And so we do have a nice little daily basing candle chilling up here around 350. On Tesla. We got this little short-term, rally base drop. So nice little daily basing candle up here. So you got some supply overhead. But that's not until you get into, like, again, closer to the 350s on Tesla. So I'll be watching the gap on Tesla. If we get back inside the gap, stay below 332.08 today, I'll look to take some puts to see if we come down and close that gap. David is looking to buy SMCI today. So SMCI is a great looking swing trade, but today you are too late, brother, man. Stock's moving pretty nice in pre-market, Sash. I just think you would be a little too late to the trade, personally. Unless you're looking to get in for like a longer term hold And if you're thinking like a longer term hold on this, yeah, these are down off some nice lower levels. I could definitely see myself dollar cost averaging in down at these lower levels, but trying to take this for like a day trade or a swing trade, unfortunately, I just feel like we're a little too late to it. It's already made a pretty decent move off that 39.10 level. Yeah, my game plan was getting in closer to like $40, but I missed my entry last week down around 40. Just wasn't paying attention to grab that entry off that higher low. And so seeing that my entry should have been at 40, the stock's at 44, I'm $4 late to the trade. From where I see my entry should have been to where the price is now, I know I'm $4 late. So I still need to map out my risk reward to see, does it make sense to take this trade, even though I know I'm $4 late to the trade. So where would I have to get my entries? 44. Where do my stops go? I put my stops underneath this higher low on the daily, because we're expecting to see a higher low break to the upside. So if we don't break to the upside and we make a lower low, this trade's invalid. So at least I know if I take an entry here at 44, stops are under the higher low, and I'm looking for the break to the upside. Right. And then we're looking for a basic measured move up, right? So first leg up, this is your first leg here. Retracement, we're looking for the second leg to the upside. And so we're just going to measure the first leg's move. So we're going to measure that move, and we're going to stack it and see if we get a second leg that's the same length as the first leg. So just measure the first leg and then take that measurement tool and put it at the bottom of the retracement and just put it there. And so that gives you an idea of target for this second leg push to the upside. So target's right around like $56. And that's a good area too, because hey, you got a lot of resistance up around $55, $56. So at least we have an idea of where target would be, right? So target's going to be up around $55. What's the risk reward here on SMCI, even if you pull the trigger at 44, $4 late? You're still banging out a nice little 3-to-1. Still a nice 3-to-1. But again, I'm not taking it because I realized my entry should have been down around $40 last Thursday with stops under 39 with the same target up around 55. And so 3-to-1 odds, I missed my entry that was giving me, 7-to-1 risk reward odds. So I see in hindsight, like I've missed my best entry, and I'm not entertaining a 3-to-1 swing trade on SMCI. I was definitely entertaining a 7-to-1 risk reward setup, but a 3-to-1 doesn't excite me too much. So, I mean, I see the potential, but like I said, I'm like $4 late to the trade, so I'm not taking it. But I think there's good potential up to 55. All right. What next? What else we got? So, SMCI, we're good to go on that. Tesla, we discussed Tesla. What about AMD for this little daily gap fill? Where's AMD at? AMD's getting close. So I think AMD to the short side today is worth watching. We got this nice little daily gap that's inside of some monthly, weekly demand. Or I'm sorry, monthly, weekly supply. So we got weekly supply, we have some monthly supply, and we have that daily gap sitting right there as well. So if we can see AMD come up to like 126.90, fill that daily gap, we're also inside of some of that higher time frame supply. I think that's a good area to look for some puts on AMD. So that's the objective. Can we come up and fill the daily gap? And if so, I would just naturally get short off the top of the gap. We call that the gap fill rejection. So fill the gap and then reject off the top of the gap. And we play puts on that type of setup. But we have some additional confluence. We're inside of some of that monthly and some of that weekly supply. So that's an added confluence to take that trade short up around 126.90. on AMD. So AMD is on watch for today for the gap fill shorts. What's up with NVIDIA? Is NVIDIA setting up? NVIDIA is not setting up. All right, so NVIDIA not for today. AMD top of the list. Tesla maybe. Maybe. Oracle, ORCL. Let's get it. So we got earnings after hours tonight. So yeah, Wednesday the 11th, we got earnings tonight. Let's go see if we have any earnings trade, man. You're looking at a short, but you're not confident in the trade. Well, let's see what we got. So if we're going to do any kind of earnings play, we just need to definitely be looking to do that off some supply and demand. Any kind of earnings play. So let's go to a monthly, and we could both agree that there's going to be some of this monthly supply, right? So we see this gap down month over month, base, drop, nice impulse. So we can see we have some of that monthly supply. Let's go flip it to a weekly and see where our weekly is. So nice little rally base. This is the drop. We start to see the impulse out. So here is our weekly supply. Just not a fan of how we wicked above it here before we started to see the impulse. But if we measure that move, right, we see that the impulse was at least 2 times greater on that weekly candle. So just that one weekly candle out was still at least 2 times greater. I just don't like the gap ups, the pushes before the impulse out, but there's still going to be your weekly supply. All right. And then let's go finish it up on the daily. You're starting to see something maybe for a low risk short where your investment would be your risk. That's how you look to trade some of these earnings plays inside of supply and demand. Is whatever your investment is, that's your risk. So if you're like, I'm only willing to risk $200, that's all you're going to invest into the trade when you're looking to take puts. Do we have any daily? Yeah, we do. So price, look left. Here's your rally. Here's your base. There's your drop. So let's go ahead and mark up our basing candle here. So you're hitting the overlap. You are hitting the overlap on ORCL. So you have the monthly, weekly, daily supply overlap that all sits right here, man. Between 178.50 to 180. So again, that's 178.50 to 180. That is your overlap between daily, monthly, and weekly supply. So where's price? Price is hitting the overlap, right? Look at price here on Monday. Straight move to the upside. Hit that overlap. Drop down. Price is coming back up into all of that supply ahead of earnings. This is a good earnings play to take puts through earnings because you're sitting in some of that monthly, weekly, daily supply. But the best way to get involved in these trades is, hey, listen, it's still a risky play. You're trading through earnings. Yes, you have a lot of technicals to back up the reasoning. So it's still better odds than a coin toss, right? It's not 50-50, call it 60-40. So there's slightly higher odds taking a trade through earnings when we are looking to take those trades based on supply and demand. So slightly higher odds, but you still need to make sure your positioning is dialed in. I would not invest any more than I'm willing to risk. So if I bought $500 worth of put contracts, that's my risk. I'm willing to let those expire worthless and see if this trade hits. It's a boom or bust. So that's how I would go about it on Oracle. So would I take a short on Oracle through earnings tonight? Yes, because we're hitting the overlap. And again, short dated options. You're looking for a big gap down tomorrow. Contracts print, start closing those out the day of. And if it gaps up and pushes, you're going to let your contracts basically expire worthless, and your risk is simply your investment. Yeah, brother. It looks good, man. I think there's potential here. All right, what else we got? But look at you, Corey, bringing us a nice little swing trade through earnings. I can dig it. That's going to the top of the list. Swing trades, ORCL, puts today. We'll start shopping them, man. We'll see what some like 170s look like for Friday. We'll even shop some next Friday, maybe some like 165s and kind of see where the 165s put you. And what we need to do as well is see what the expected move is through earnings. So for those of you that use TOS, Thinkorswim, if you go to ORCL options and you look at this Friday's expiration, it'll show you plus or minus what the expected percentage move of the stock is going to be through earnings. It'll show you that implied move. So we have to get an idea of what the implied move is. Is it plus or minus 10%? Well, we can expect to see plus $17 to the upside, plus $17 to the downside, depending on what that implied move is by looking at the options chain on ORCL. So that'll probably be able to help us pick and choose some correct contracts as well. If we see the implied move is only, 2%, well, what is that? That's $3. So I wouldn't want to go 165 puts if we're only going to see an expected $3 move through earnings. You know what I mean? So let's just go see what the expected move is, and let's utilize that information to help us pick and choose our options as well. Tonight, swing trade, Oracle, puts through earnings. I like it. SPY back down to $600. It really depends on what we see the SPY do off this top zone that we're sitting at right now. So here's what happened, guys. We had CPI data drop. Okay. Market spikes to the upside. What level did we just get to? We came up and hit that 605.38, the 605.85 zone. Oh, interesting. Wow. Who would have thought that these zones are respected? Yes, that's a daily zone that we went to the daily and found. This zone had nothing to do with today's session, had nothing to do with yesterday. We literally just went up into the daily and said, all right, where is our next daily zone going to be based on the methodology I created to finding these key zones? And again, we saw it was going to be up at that 605 level. Boom. SPY, CPI data drops. Boom. Right up to that 605 zone. Tap, tap, tap. Can't break it. We're dropping on off. So that's going to be our pretty strong level of resistance for today's session. So if price comes back up to that 605 zone and we fail to break it, I'm playing puts back down to 603. And if we ever fall below 603, I'm looking to take puts down to $600. Actually, a tick below $600. But to the flip side, right? Because again, who's to say the market's going to set up short? Like, we don't know we are going to see the short setup. We have no fucking idea what's going to happen, right? So, like, why come in and only look for puts and come in with short bias? Come in neutral, look at both sides of the market. Like, what if we break the 605 zone and we see a strong break through it and we clearly see buyers are still here in control? Well, I definitely don't want to short the market if that's what I see. I would rather wait for the retest and then play the SPY long to 608. But we just have to see what the SPY is doing in real time when we're sitting at this zone. Like, what's going on? What's taking place? Do we see more sellers than buyers present? If so, we simply take puts. Do we see a strong break of that zone? If so, wait for the retest. Do we have good price action suggesting there's more buyers than sellers? If that's what we see in real time, let's play calls to 608. So regardless of how the market sets up, we just need to wait for the market to set up. It doesn't matter how it sets up. You just got to wait for it to set up, whether that's short or whether that's long. It doesn't matter. You just need to wait to see that setup appear and then take your trades accordingly just into your next zones. That's it. Easy peasy. What's the confluence for ORCL puts? We are coming up into monthly, weekly, and daily supply, where we expect there to be unfilled orders present at these levels, to where we can come back up and revisit these zones, fill some of these unfilled sell orders, and see price react to the downside. All right, so that's the confluence, is we have 3 overlapping zones of supply across multiple time frames. So those are your 3 confluences: monthly, weekly, daily supply. This guy's info is good. Great job. Wilder, I appreciate you, man. I've only been doing this for 10 years, guys. All day, every day, for 10 years. So yeah, I definitely have a little bit of experience. And I've been coaching traders for 5 years. Coached over 1,000 people since 2019. So I got a lot of experience coaching other people to success as well. So yeah, man, I just tell you what you guys need to know, right? I don't want to give you too much info that's just going to distract you, throw you off track, or just, cause more confliction. It's like, I just want to distill this down to the most important 10 things, teach you guys these things on a daily basis, help you guys implement these things, and you can start to make a lot of good money just focusing on these core concepts we talk about. You made $8K at 8:30 today. So you traded through CPI data. Okay, cool. Hopefully you had an edge behind it. Hopefully it wasn't just a coin toss gamble. But yeah, 8:30, we had CPI. Market explodes to the upside. Mr. Jared Mason, what's up, dude? Thank you for the HTZ and supply and demand. That has changed my trading 180%. That's what's up, dude. Jared, I appreciate the kind of words, man. Are you Kendra's husband? Because I've been talking to a Kendra. Is that your wife? Is that your significant other, Mr. Jared? Because yeah, if so, you guys have been dialed in. You guys have been taking the free tradings. You guys have been implementing what you've learned from the tradings. And you're already saying, like, in what, 2-3 weeks, complete night and day difference with your trading. That's what's up. That's good stuff, man. And that goes for everybody that's listening. Like, everything that we talk about, I have free trainings that I hook you guys up with. So how I find my zones of support resistance, I have a training that I'll send you guys for free. Supply and demand concepts, how to structure an account, how to identify confluences, everything that we talk about on a daily basis that I teach you guys. I have free lessons I'll hook you guys up with. So if you guys want a free lesson, just shoot me a DM, say, yo, man, hook me up. And I'll send you a link to it. And be like Jared. Be like Jared. Take the training, implement what you learned, and start to see better results, guys. Trading doesn't have to be hard. Oh, okay, cool. So Kendra is the wife. There you go. Cool. We're working as a team. Yeah, she told me, man. That's what's up. Well, nice to officially meet you, Jared. Happy to have you here, man. And super excited to hear that you've just taken a couple of those free trainings, man, and it's helped tremendously. So maybe I just got to stop giving these free trainings away because they're just like some secret sauce, man. It's some golden nuggets. I give all of this stuff away for free. Like, geez. No, I'm kidding, man. I like doing it. I like helping you guys win. That's what's up. Yeah, just send me a DM if you guys want a free training, and I'll hook you guys up. If you want to work with us, you can also send me a DM, and you guys can work with us if you're a good fit inside the mentorship, and we'll speed up the process, right? Because if you go about trading on your own, it takes on average 2 to 3 years is like the statistic that it takes a trader to get to profitability. We do it in like 3 to 6 months. So we can help you speed up the process and shorten the learning curve and get there 5 to 10 times faster. That's the biggest thing. Structure and then, time to market. It's going to be sped up quick. But definitely, you guys want a free training, hit me up. Send me a DM on TikTok. If you guys want to work with us, send me a DM. We'll have a conversation and go from there. You're a trucker and we watch together and she pushes the buttons. There you go. That's what I have my wife start doing. It's going to teach her how to trade and just let her push all the buttons for me. All right, what else we got? Do we have time for one more? We do. So last stock that you guys have on watch for today that you want to pick apart, do some analysis on, drop it in the chats. Let me know what stock it is, and we will look at it. Last one we have is ACHR. Let's look at ACHR, bro. All right, so penny stock, probably low float penny, $11 in price. We just came down into that daily demand. Did we hit it? Yeah, we just tapped the top of that daily demand zone. We filled that daily gap last Thursday. We had a nice pop, nice big push. We came down and closed this gap as well. So what we see here is it likes to fill gaps and it respects the gap levels. So look at this gap level. We come down, close the gap, we rip. Then check this out. Just here on Monday, big gap up. What do? Come down, close the gap, big spike to the upside. So if we ever see another gap up, it's safe to say we can come back, close the gap, and see a nice pop to the upside. Where is ACHR right now? Are we gapping up? Yeah, a little bit. Yesterday we closed at 1138. Right now we're at 1166. Let's just go ahead and mark up yesterday's close. And let's see if we come down and fill the gap today. Basically, you want to see the same thing that happened Monday, right? What did we see on Monday session? All right, let's go look at Monday. Monday, we opened higher. So this was the close on Friday. This was the open on Monday. Big gap up. What do we see? We come down, close the gap, we bounce. So that's what you're looking to see happen today. You want to see it open higher based off yesterday's close. You want to see that gap up. If we come down and close the gap off yesterday's close at 1138, we're expecting to see a bounce to the upside. So you would look to play long, get long, down around 1138 for a gap fill balance and see if we get that next big pop and leg to the upside. So that would be like the first thing that I would, be looking at with ACHR is a simple gap fill bounce off yesterday's close, and it's the same thing we saw just here on Monday. Let's go back to the daily and see if we have anything else, because I'm sure we will. We have a pretty clear daily zone of resistance just chilling right here between 1152 to 1158. So we can see here that we have a lot of resistance, high day reject, high day reject, high day reject, high day reject. So we've hit that level several times. That is between 1152 to 1158. That's going to be a zone of resistance that we could see turn support if we break and hold above it. But then where could we see the stock go to the upside? 1185 is going to be a target to the upside. So 1185, just off that prior spiking high. That's a target. Next target is going to be off that spiking high back here at 1248. So at least you got two targets to the upside. 1184, first target, second target, 1248. And we're looking for one of two things. We're looking for ACHR to open, drop immediately to the downside into that 1138 level, and you're looking to catch this for a dip buy off the gap level. So if we come shooting straight down to 1138 and we start to see a bounce off that level, you're looking to get long for a dip buy to see that bounce to the upside. First target is going to be 1184. But let's say we open and we don't drop straight down to that 1138 level. Let's say we gradually start to pull back. And it's a slower trickle. It's a slower pullback into that zone of support between 1152 to 1158. And you see good price action developing off that zone. And you clearly see there's more buyers than sellers present. Then we could safely take this long off that daily zone of support and still play it long too. Your next target, 1184. Where's your second target to the upside? 1248. So there's a couple different ways that we could see the setup. And depending on how it sets up will depend on what we're looking for. and then how we get prepared on the trade as well. So slow, steady pullback into that zone of support with good price action. That's going to be enough to take this long to the upside. If we open and just drop straight down to yesterday's close, 1138, you're looking to take this for a dip buy and take that long to 1184. And that's going to be your next area of daily resistance on ACHR, brother man. So there is ACHR. Low float, small cap, penny stock. Definitely can see some action. This is something that you would want to be scalping. Most definitely scalp this thing. So, all right, cool. That's ACHR, man. Yeah, for sure. Tom says, my wife already pushed all of my buttons. That's great. Yeah, you can rewind the live. Just go back to the start, fast forward. There you go. 100%. That's what I like about doing these inside the platform is you can go back and rewind it and rewatch it. Faux show. You could even increase the playback speed to watch it faster. I mean, I already talk fast enough the way it is. So if you put that, even the 1.1x, like I'm going to be like an auctioneer, man. Dude, that's me. Yep, 100%. That guy in a little coat. All right, let's get that Zoom fired up. Let's get ready to rock and roll today, traders. So I'm going to end the morning TA session. Appreciate you guys tuning in. Jared over on YouTube. I appreciate you, man. You keep coming back on a daily basis. You're hungry. You're motivated. You want it. And you're going to keep learning a lot just through these morning sessions that we put together. So appreciate you being here, man, over on YouTube. Absolutely awesome, man. Definitely subscribe, like, share this too, man. That means a lot. If you know other people that would benefit from this, just share a link to the streams, to my YouTube profile. It means a lot. And then same thing with you, ladies and gentlemen, over on TikTok. Appreciate all of you. Thank you so much for being here. Hopefully you have a blessed day. And you guys trade smart and trade safe. All right. I'll see you guys back here tomorrow morning. But everybody inside of the mentorship, give me 2 minutes. I'm going to fire up the new stream, get the Zoom session loaded, and we'll be all set, ready to rock and roll. Start trading together. Make some money today, guys. I'm ready to rock. Let's get it.